Hello and welcome to CMS Forex Daily Video Recap. I'm your fundamental market analyst, Nick Nassar. Today is Tuesday, October 5th, 2010. We had a pretty busy day of fundamentals, so let's get right to it. During the Asian session, we saw the Bank of Japan cut its policy interest rate to virtually zero and announced comprehensive monetary easing in order to spur financial growth, including a 5 trillion yen fund to buy private and public sector assets, all of which are strong measures that took financial markets quite by surprise. The Bank of Japan pledged to keep its benchmark interest rate at virtually zero until deflation had ended. The yen responded by declining slightly against the dollar and more so against the euro. In subsequent trading, however, the yen did pare back some of its earlier losses against the dollar, and we'll take a look at those highlights in just a minute. But first, let's take a look at our second important interest rate decisions from overnight. The Reserve Bank of Australia also surprised the market by failing to tighten monetary policy. Economists had overwhelmingly forecast the RBA would hike its overnight target by 25 basis points to 4.75%, citing a desire to keep a lid on inflation and act before its commodities-driven economy overheated. But with the economy growing at around trend and interest rates to borrowers close to their average of the past decade, the central bank may have been concerned about over-tightening. Still, if economic conditions evolve as the RBA expects, it did signal that higher rates will be required. In the US, the Institute for Supply Management's non-manufacturing index came in better than expected, which followed stronger data from the services sectors in both the Eurozone and the UK. The ISM Services PMI rose to 53.2 for September from 51.5 in August. The increase was led by a gain in new orders, and we also saw the employment index move back above the 50 level. In the UK, the services PMI there climbed to 52.8, also better than expectations, which had the index declining slightly from the 51.3 we had seen in August. Even the final version of the Eurozone PMI climbed above its flash estimate, posting a 54.1 reading. However, that was a bit slower than the final reading we had seen in August. Still, global stocks surged following the moves by the Bank of Japan and then the positive services data. Stocks were up in Japan, Europe, and that carried over into strong gains in the US session. That gave currency markets a strong risk appetite play. Let's delve into our main currency pairs. Let's start with the euro-dollar pair, which we had seen yesterday decline strongly from the 1.38 level. However, after finding support overnight at around 1.3640, we see the pair rallying as we had risk appetite, consolidate a little bit at the 1.38 level, and then move above that to test 1.3850 in the New York morning trading. This move in the early New York trading session also bested the 1.3820 resistance level that we had seen back in March 17th. With the US Fed looking at more quantitative easing, the Bank of England signaling that they may do the same, and the overnight moves by the Bank of Japan, it looks like the European Central Bank may be the least likely to restart a quantitative easing program, which puts it in the best shape out of the four major currencies. The rally in global stocks today also gave further momentum to the pair as traders shed the safe haven of the US dollar throughout all of our currency pairs, as we will see. Looking at the US dollar Japanese yen pair, we can see that the yen weakened in the wake of its announcement, rising to with the US dollar Japanese yen pair rising to just below the 84 level. We can see that that came close to our 200 period moving average, and we did find some resistance there. And with broad US dollar weakness today, we actually reversed those losses by the yen and moved strongly back in favor of the yen, even breaking below our support from yesterday and Thursday's and Friday's session of last week at the 83.15 level. We moved all the way down to 82.95, which was close to the area we had when the Bank of Japan intervened in mid-September. The reason the yen did not move more against the dollar was that the Fed is widely expected to conduct its own stimulus program soon, and so that mitigated the effects of the quantitative easing from the Bank of Japan. Also, we had a strong risk appetite, which in this currency pair has boosted the yen against the dollar. Now, we did find some support at the 82.95 level, and we see the greenback pairing some of its New York session losses. And it's interesting to note that so far there's no sight of Japanese authorities, even as we hit the levels where the Ministry of Finance had intervened, as I had mentioned. It may be a risky strategy to not follow up important policy shifts with massive intervention by the Bank of Japan, but it seems that Japanese authorities are content to sit on their hands until the dollar-yen pair perhaps falls to the 82 handle. Looking at the euro-yen, however, we see that the yen did weaken in overnight trading and then extended that weakness as we moved into the New York session, as the euro was the big winner in today's trading. It also shows that the resurgence of the yen against the dollar was more isolated to the weakness of the greenback. The euro-yen pair now tests its resistance from yesterday's session at 1.1525, and we can see that we continue to trade within an upward sloping channel in this pair since mid-September. Now let's turn our attention to the Australian dollar and see what happened in the wake of the RBA's surprise move to not raise interest rates. Well, as you would expect, the initial response was to sell the Aussie and buy the greenback, but after falling to a one-week low around 0.9540, we see the Australian dollar finding support and rallying rather strongly, and even in New York trading moving above the level it was at prior to the RBA release, as we tested the levels as we tested the levels at 0.97 at around noon New York time. The pair rebounded so strongly. As I mentioned, we had seen strong risk appetite, especially with global stocks performing well, and we saw the US dollar sold off rather broadly. We still have resistance in this pair, however, from late last week and early this week at 0.9725 and the 0.9750 levels. So if this pair continues to gain, we should monitor what will happen once we test those levels. We see a similar but not as strong swing in the Aussie-Yen pair. First, we see the Aussie sliding to around 79.95 in the wake of the RBA decision. Then we see some consolidation following the Bank of Japan report. But overall, we find support. And then with the rally in global stocks, we see the Aussie pairing its earlier losses to trade near its level when the RBA announced its decision. So pretty volatile day here, but we can see that support at 79.80 matches up very well with our support level from September 23rd, and we remain confined in this sideways range in the pair currently. Taking a look at the US dollar Canadian dollar, here we see a strong move in favor of the Canadian dollar following a move in favor of the greenback in the overnight trading session. We see the pair again breaching the 1.02 area, which had been our support for this pair for late September. We moved down to tested the 1.0150 level, which was close to our lows at 1.01, which we had seen in August 6th. You could see that if we zoom out to this 4-hour chart, with our high-low zones now measuring 1 week. Today's move extended the move we had seen in Friday in the pair, and we could see this pair continue to go in favor of the Canadian dollar as we continue to see this broad global weakness in the greenback. Finally, with the dollar much weaker today, we saw gold prices shoot up past the recent resistance at 1,321.50, surging to new record highs just below the 1,340 level. If the greenback continues to be on the back foot, we should see gold continuing to soar to new highs. And that does it for today's market highlights and fundamental data. Now let's take a look at the upcoming fundamental docket. Following a very busy Asian trading session, tonight we just see the UK BRC Shop Price Index. Overnight, Japan posts its the Bank of Japan monthly report, while in Europe we have the UK Halifax House Price Index, the final version of second quarter GDP from the Eurozone, as well as Germany factory orders. Tomorrow in the US, we get two measures of employment, the Challenger job cuts, as well as the ADP employment change for the month of September. We also get a speech from Treasury Secretary Geithner, and Canada posts its IBPMI, a measure of its overall economy for the September period. And that does it for today's video recap. For more news, videos, and analysis, please visit our site, cmsforex.com. I want to thank you for watching and wish you good trading.